Hi, I'm Patrick Manzi, Chief Economist with the National Automobile Dealers Association, here to give you an end of third quarter economic and autos update and outlook. Now, the biggest story this year in the auto industry has been the semiconductor microchip shortage that has severely impacted vehicle production throughout the globe. At the end of the third quarter, inventory on the ground here in the U.S. was just under 1 million units, and that represents a decline of 65% compared to the start of the year. Inventories are unlikely to change too much before the year ends and are likely going to continue to impact sales in the fourth quarter of 2021. Now, at the end of the third quarter, we saw sales average a SAAR of 13.3 million units for the third quarter, and at the end we saw September sales reach a SAAR of 12.2 million units. Now, for context, a 12.2 million unit SAAR is only 100,000 units above the SAAR observed in May of 2020, when we were still under COVID lockdowns in many parts of the country. So it is clear now that low inventory levels are restricting new vehicle sales and will likely continue to do so for the rest of the year. So as a result of these inventory constraints and demand limitations, sales limitations, whatever you'd like to call them, we have reduced our sales forecast from 16.5 million units down to 15.2 million units for all of 2021. Because new vehicle inventory has been so limited, many consumers have had to turn to the used market. This pushed up wholesale auction and retail prices to records in the summer. We did see used auction prices begin to cool a little bit in the late summer, but Cox Automotive is reporting that their Manheim used vehicle wholesale auction price index has posted another record in September. Now, according to J.D. Power, used vehicle wholesale auction prices are up roughly a little over 50% compared to the pandemic. Now, it's likely we are going to see some seasonality to some of these used vehicle auction prices, but used vehicle prices are going to continue to be elevated until this new vehicle inventory situation can be dealt with. And by that, I mean until inventory levels can return closer to their pre-pandemic levels. Now, it's unlikely that we're going to see these inventory levels get back to anywhere close to where they were pre-COVID by the end of the year. We're going to be dealing with the impact to production from the microchip shortage and other supply chain disruptions throughout the whole year of 2022. And at this point, because COVID is so widespread across the globe, there could still be further supply chain disruptions or limitations on vehicle production. So even by the end of 2022, it's still unclear exactly where inventory levels will be. We do expect that we will see a slight increase of maybe 100,000 units or so before the end of the year. And then hopefully, if all goes according to some forecasts I've seen, we may be closer to 2 million units by the end of 2022. Now let's turn to a discussion of some of the key macroeconomic variables that we track in relation to the auto industry. In August, job gains totaled 235,000. This was well below consensus forecasts and estimates, and as of this recording, September data are not yet available. But we do expect that we will see job gains in September at least at August level and hopefully higher. So far, we're about 5.3 million jobs below where we were before the COVID pandemic hit, and we are seeing really strong indicators that the labor market is continuing to recover. There are now over 10 million job openings out there, and there are now 1.25 job openings for every unemployed person out there. Now, turning to consumer sentiment out there, in August we saw consumer sentiment fall to a post-pandemic low, lower than even what we saw in August 2020. Now, behind that headline survey number were consumers who were concerned about the spread of the Delta variant, rising prices, and etc. September's reading did turn positive and head in the right direction, but again, consumers were a little less concerned about the Delta variant, given that cases have begun to go down now. But consumers are still concerned about inflationary pressures that we're seeing throughout the economy. One of those sectors is used vehicle prices. We've seen increases in other goods like appliances, lumber, even food prices, and that has caused many consumers in certain markets to hold off on their purchases until they believe that these price increases have slowed. Now, currently, inflation readings are over 5% or between 4 and 5%, depending on which metric you're looking at. Now, that is a good bit higher than the Fed's preferred target of around 2%. It's likely that inflation is going to continue to be elevated while we're dealing with some of these supply chain shortages and while demand is still really hot coming out of the COVID recession. But I still do not believe that that the majority of these price increases are going to be permanent. We still expect that prices are going to cool maybe by the second quarter of 2022. But again, COVID still, like many other aspects of the economy, COVID is still in the driver's seat, and we could still see further supply chain disruptions in 2022. Now let's talk briefly about battery electric vehicles. Through 9 months of the year, the sales of battery electric vehicles represented 2.6% of all the new vehicles sold. This is up about 110 basis points in terms of market share compared to the same period last year. And we hit a milestone with respect to franchise dealers selling EVs. Now, from 2012 to the third quarter of 2021, franchise dealers have sold over 500,000 battery electric vehicles, and there are all kinds of new models coming onto dealer showrooms within the next 18 months. And we do expect that franchise dealers are going to capture a bigger and bigger share of that battery electric vehicle market going forward, as many of the new products are in very hot segments in demand from consumers. With all of these new battery electric vehicles expected to land on dealer lots very shortly, America's franchise dealers are undertaking massive investments to ready their stores to sell and service these vehicles for American consumers. We at NADA estimate right now that franchise dealers will invest between $2 and $3 billion to ready their stores to sell these products.